Hey, everybody. Okay. If anyone wants to talk about macroeconomics, lock in with me. Chilling this Sunday night. Eating ice cream, snowed in, enjoying my rent. You know? Silver, silver, silver. This is insane things going on. That's for sure. What's up? What's up? What's up? I'm chilling, just talking about markets. If anybody wants to join in, it's probably a bit too late, but maybe some people will be here. So that thumbnail, the backstory behind that thumbnail was the very first time I saw snow. So figured it was fitting to use that as the thumbnail. I went to Philadelphia. And while I was there, I toured the campus of University of Pennsylvania, and that was like such an awesome experience. So I'm gonna get started. Let me see something though, real quick. Is this gonna work? I don't know. Unable to connect to iPad to start a sidecar. Disconnect from other mirroring and AirPlay sessions. Apple, come on, bro. I thought you were making like the full-on like ecosystem. You're making it tough for me, man. You're making it tough for me, you know? I can't like mirror my display. I can't sidecar. Like, what's going on? Spend all this money on tech to try and have cool shit, and you're trying to tell me that this doesn't work? Crazy, man. I'm trying to have my iPad as like a second monitor here so I can show you all what's going on, but whatever. I'll do it another day. But essentially, I wanted to talk about macroeconomics. I think as a whole, us as retail traders get caught up in this particular company's earnings and this particular company's, new sales product or this or this, right? One second, get my foot massager going so I could give you pure alpha generation as we're on the hunt for asymmetric risk. And so I'm not going to sit here and act like I know it all or I know about foreign policy in like a meaningful way or anything like that. I really don't. I really don't. I just kind of know how humans work to some extent, like to a smaller or even a lesser extent, and based on what's happened in the past, right? We have this huge range of thousands of years that happened prior when XYZ happened here or when ABC happened in this case, right? So actually, one moment, I need to get a book. Crap. I don't have this book? No way. Guys, I'm so sad. I thought I had this book, but I don't. I guess it's maybe I lost it back in Florida or it's in storage somewhere there, but damn. I swear I had this book called The Bitcoin Standard. I love it, honestly. It helped me kind of frame my point of view of help me frame my point of view on on macroeconomics and really the value of money. What I think I want to start off with this like macro framework and the opportunities that I've found there are that I want to start with sorry. Is it in this book? Maybe the piece of history could be in this book. Nope, not even. Maybe bimetallism can be talked about. I mean, we definitely talked about it a bit the last live stream, I believe, or stream before that. We talked about bimetallism and the ratio of one metal to another, and what that can mean for something as an arbitrage opportunity or even an opportunity as a whole. And what I think is that's like super, super key, like the core thesis that I wrote out was like the US stock market is like without a doubt, hands down, the greatest wealth creation engine probably in history. Because global capital markets create opportunities like but they global capital markets, right? Not just the US, create opportunities everywhere, right? And understanding certain countries' perspectives and market goods and compositions can reveal what I would like to call is asymmetric risk. Maybe I could show you with, yeah. Actually, I like this. This looks good. I can show you with the screen. Nice. Asymmetric risk, right? Asymmetric risk versus reward basically shows, right, in this visualization right here that I just found on LinkedIn, that you're taking small points of risk at moments where there's larger points of reward, right? And a good example, a good like paper everyday example could be if you're somebody who like writes movie scripts or does something. Maybe you write movie scripts or you have this creative point of view on like cinema, right? An asymmetric risk that you could take is take a moment to write down ABC XYZ, certain like points and real details that you find interesting about something, or literally about whatever that interests you in this case, right? Maybe it was the blue hue of the movie that made you feel this way, or whatever, right? And spend hours on the internet like searching deeply for anyone of power, anyone of in a predicament, in a placement like yourself, or sorry, not like yourself, but in a more like a superior point of view, right? And then sending it to them. Asymmetric risk. If they don't respond, so what? If they do respond, shoot, that's going to be probably a nice, point of validation to yourself. Maybe your idea or your thesis was so bright or so different that they valued that point, or they just valued the fact that you even reached out in the first place. How'd you even get my email, Nedrick? Who even are you? What do you know about macroeconomic thesis and the fact that the Chinese central banks are building up tons and tons and tons of metric gold for their volt because they plan on no longer using the US dollar at the scale that they have done for quite some time, right? Like doing those things are what is called asymmetric risk, where one side is the reward of something. In our case, of what we're trying to focus on, not so much of this left side per se, but we're talking about positive asymmetric risk, where me sending that email, the risk that I had was what? Maybe sending it to the wrong email. Okay, so what? Maybe I sent the wrong information. Okay, maybe maybe that person on the other end will tell me that my information is wrong and maybe point me to where I'm right or where I could be right. And then what does that do? That ends up being a teaching moment for you to learn more. And now you have this new source, or, like, so whether it's the exact outcome that you wanted per se, maybe not, maybe, but the risk is still beautiful to the point that there's no L in this scenario because the L ends up being a lesson, right? So we focus on, Nedrick, focus on asymmetric risk in the market, where as much as I possibly can, sometimes it's not asymmetric, Hello. Rum, tres leches to get me through, But that's usually the goal, to find asymmetric risk, right? So when I'm randomly emailing hedge funds and, capital allocators overseas and saying like, hey, this is how I feel about this and this and this, it's asymmetric risk. They can respond to me or not. It doesn't matter. Because guess what? I'm doing the deep research, and I'm going to go ahead and take a few moments to see what I can provide to them as value. And if they plan to pick it up, great. If not, it is what it is. I did deep research. I now have an understanding of something. I'm proud of myself for putting it together. And you can go from there. Maybe you get feedback, maybe you don't. But with that being said, I am still working on the 2026 global market outlook. That should be coming soon. I promise you guys, like, as soon as we got this stream, I'm going to write more. I've just been kind of struggling with trying to button that up really as of late. So yeah. So if we get back into what is maybe like the themes, right? That's the core thesis of what's going on. So if we were to maybe talk about, certain things that cause these adjustments, like, let's just take a look at history. Let's take a look at history here. We got basically the US didn't really do too great between the 60s and the 80s, right? The foreign stocks crushed them because US was going through stagflation, which is when the inflation is super elevated, well above average, and then it also stays there, well above average. So the U.S. consumer now was not necessarily, one that was a strong one during this period per se, and that's one, right? Then we stepped into a slightly different period where the U.S. kind of was getting out of its growth, but Japan was the top dog. Manufacturing dominance, like pure dominance. We're talking Sony, Nintendo. We're talking every and anything, a Walkman, all those like smaller tech trinkets that dominated the 90s. Like, Japan was the reason behind it. And because Japan was the reason behind it, you could see it in the chart. In the Nikkei. Where are you? There you go. So let's go into that one. Wait, what? That's all you got for me? 2617? Man. Nah, bro. You got more than that, bro. Stop playing with me. Okay, that's better. Yeah. Okay, here we go. That's better. Let me just change it back to a line graph. Can I not? Oh, no, I can't. Oh, no. Okay. Well, I can't. Oh, that kind of sucks. Columns is weird. Never tried that before. Whatever. Let me turn this off. My fault. Okay. But so that's the dominance. That's the dominance that we saw all the way from the into the 90s or into 90 basically. And then it falls off a cliff. Boy, it falls off a cliff. Why? Because Japan changes policies. They end up not really staying in line with what society wants per se. And I'm not gonna say like act like I know every single depth of the story. I've watched documentaries, I've read books that go into these types of pieces, and then if you also just look back on your life, if you lived long enough to see what technology was prior, it was companies, random companies like Ryko making film cameras, these Japanese film cameras, like, and you think about it and you're like, oh, like that was basically what technology was back then. Like we barely touched a computer for real. Like if the everyday person at least, right? It was film cameras, Walkmans, boom boxes, devices that these Japanese firms made. So yeah. Then we step into, basically early 2000s, up until the Great Financial Crisis in 2008, 2009. S&P ends up basically underperforming, not really great, right? We have negative 10% in that range, nothing, no real great there. Other countries moved. We saw a commodities super cycle. Interesting. That sounds like something we're going through right now. So maybe I need to focus on this a bit more, right? Once I start to connect these dots that maybe we're going through a super cycle ourselves, right? And then what happened? Emerging markets did 155% with basically a 10% annualized. Like, oh, so emerging markets. So like non-US assets. So like, South Korea's, Latin America's of the world, okay. That's what happened during that stint of like a world order. Got it. BRICS boom, other alliances. Okay. Interesting. That sounds a bit familiar. Right? We're in a housing crisis. Not one like 2008, 2009, a very different, slightly adjacent housing type of crisis, right? We're having a housing affordability crisis as opposed to what was at that point too affordable crisis. You know what I mean? Where they made houses too affordable, so much so to the point that people who shouldn't be buying houses for real have access to owning a $200,000 home, and they can't really even afford the maintenance on that home. And we're having a exact opposite kind of housing crisis where houses are very, very expensive. It's hard to get into a house, and we still can't afford the homes if we were to buy. You know what I mean? So it's a crisis in the same regard of what asset it's tackling, housing in the U.S. market, but it's a very different one. It's a different issue. So cool. We'll step into that. 2010s into 2024, S&P 500 shows straight growth, tons of tech, with also a relatively strong dollar, right? The US dollar is a part of this macro theme, as well as the Japanese yen and the Russian ruble and all these, and the British pound, right? All these other currencies play a role into it because foreign exchange has to occur, and there's a natural drag upon things. Like 2020, I want to say like late 2024, we had a scenario where the yen carry trade, right, which is basically collecting the arbitrage of a difference of values on currencies, right? The idea was simple. Hey, you can be given money by the Japanese banks to be able to take out loans. So if I'm somebody in the US, or somebody with access to the US markets, knowing that the US markets are outperforming. We got all types of tech stories of the woo-ha, right? We got Netflix coming out. Thanks, man. Appreciate it. Appreciate you, bro. Love. See you later, Noah. We had techs. We had tech show very strong, and then because of that, because tech was very strong, right? And being in the markets, it showed that you could do no wrong. You're getting good money over here in the U.S. markets. If it was hard to kind of if it was hard to get money or to get funding per se to put into your accounts, the idea was, hey, go borrow money in Japan because they're giving out 50 basis, they're giving out 0.5% for you to borrow the money, and you get to take that difference. You get to, that's what they call it, yield carry or the yen carry, where that 0.5% is basically fueling you to gain more percentage at the end of the day. So if it comes down to it, I'd say at the end of the year, I performed 15%, I made 15% on the year. Awesome, great. Guess what? Because that yen carry trade, I made 15.5% on the year, right? Depending on what type of structure you had, maybe. But that was giving an extra oomph. That was a little bit of NOS, a little nitrous in the tank that could do that. The emerging markets didn't do too hot comparatively. Emerging markets basically just meaning other main countries. But last year, we started to see a shift. We had several independent emerging markets outperform. The emerging market index as a whole, I believe, did 50% itself. The Korean market's up 76%. The Latin American market was up 29% year to date in 2025, right? And the S&P did 17%, right? And from 2010 all the way to 2024, basically, it was like, well, why do I care about like non-US assets from like other countries? Like, what? They're not the US. Like, they don't got Google over there. Why does it matter? And the point is, it matters because it opens the horizon for you to be able to pick out better asymmetric risk trades. Once you start to see what's happening, the behavioral adjustments, what really affects these companies and countries as well, you get to see these broader, zoomed out point of views. And then you can apply like micro point of views within them. So let's step into it, right? One of the case studies I got here. South Korea has a historic 2025 with their index up 76% in 2025, best performance in 25 years. The third highest annual gain is not random. It's because these companies are major parts of that index. Just these two companies alone, a bucket to like 30, what is that, 35, 36% of the entire index, right? So that's the weighting. Samsung Electronics, what do? Come on, guys. They made phones for quite some time. They went on to make TVs. They went on to make technology. They make RAM. They make storage, right? Like, look at this. This Samsung T7 Shield. This is it right here. This is memory. This is SSD memory now that is highly sought after right now because the AI revolution is moving so much of everything as a macro point of view, right? And when I say macro, I mean the entire world. Macroeconomics, like your lens the larger zoomed out. Microeconomics is focusing on specific companies, focusing on what exactly Samsung is doing, how are they actually partnering with these other companies like OpenAI, as well as OpenAI or just general AI memory demand, right? What is Samsung investing in research and development to be able to create better, storage and SSD storage components and so on, right? What exactly is going on? That's the micro point of view, looking deep into one company and understanding what's happening over there. But the macro point of view is saying, well, what's happening in South Korea? What's happening in that region of the world? How do they go about, ordering things? How do they go about doing things for themselves, right? So that's the important point of view here. We see Samsung and their SSD memory supercycle crazy. You see SK Hynix, or I don't even know how to really say this, SK Hynix showing a 274% return, right? Like, this is absolutely insane stuff here. Absolutely insane stuff here. And like, really what happened, just those two combined, right? 36, almost a combined market cap of over 700 billion, right? Understand the AI semiconductor super cycle. Korea seems to be the purest right now, in the point where they're about number two, right? Like, they're tied with number two. I'd say really maybe number one, simply because I don't really know a native Chinese chip manufacturer. And Korea seems like they have the one and the two right there. They got the memory and they got a chip. And you can see, right, the parent company, aerospace, defense, also, okay, social first, skincare disruption, this APR, Korean beauty. I definitely do know that, like, skincare over there is a huge thing for them. And those are all growing industries, right? Foreign investment went up dramatically the first half of the year. And, there's a valuation discount, right? This is what makes these external markets so sexy, so interesting. Because when you come over to the States and you look at our assets and you look at the Palantirs, the awesome companies that are making money, making cash hand over fist, they're extremely valued rich. Like, they're valued so rich. And when you begin to look at these other countries and you see their price to equity ratios, and you're like, well, maybe if we take our investing lens and we plan on holding this position for 9 months, a year and a half, maybe even longer, right? This is where price to equity earnings actually plays in a bit better, because we've all seen companies expand dramatically their price to equity earnings and then come back, right? You've seen that. And NVO is an example of that, where it got ahead of itself. I believe its price to equity at like 140 was like 40, right? A very extremely rich and overvalued in a way based on its earnings company, and it retracts back to a much more palatable, much more enjoyable price point. Because now, guess what? The risk that we talked about, right? The asymmetric risk of NVO going up more after buying it at 140 becomes much if it flips to the other side. Because now the downside risk is so much greater, 60 to 70%, compared to maybe what we could get. Maybe we could push it into the 160, 165. But that risk isn't really worth it. Like, are you trying to tell me I'm risking 70% of my capital just to try and get 20% by going into 170 from here after being so overvalued? So this is where the emerging markets start to begin an opportunity, start to show an opportunity rather, because like their price to equities ratios are at a discount, and those are real companies making real money with real demand, and it's a way cheaper buy. Than some of these other companies. You know? So good ice cream. So that's the South Korea point of view. Now, if we step into Latin America now, Latin America has a different angle to it. It was a very poorly performing region in 2024, and now it's leading globally in early 2026. And I was trying to figure out why, and it seems like it's really because of this: the industrial and commodity adjustments that are occurring right now. These adjustments are because these parts of the world have these assets. They have these commodities. Chile makes up 42% of exports on copper. Also a huge export country for lithium, right? This green transition, the EV demand. I mean, the EV demand is still there. It has definitely retracted a bit, but I think the EV demand has more so transitioned into just demand, like electrification. Right? Like of tech, right? Like us transitioning back in closer into hardware. Right? Like I feel like for the last maybe 10, 15 years, it's been software. Yeah, you can code this, code that. And as of recent, we've kind of pushed back into what is now like hardware. Hardware's become more important, right? In a way, because AI needs these chips. They need these SSD and DRAM and NAND units, and it needs these battery components for us to reach AGI and actually have fully working, fully fledged robots, like what they just preached about over in Davos at the World Economic Forum, about the importance of batteries and robots potentially, and what it's going to do for our society, right? And then you got Argentina, more so on the food production side of things, soy, corn, even lithium potentially. And the catalyst over there is, their leadership reforms. Some of the changes and adjustments that they've made, how cozy they've gotten with the current U.S. president. You got Colombia as well, right? Colombia, which we're going to get into, crude and their strategic positioning with Venezuela potentially, oil, coffee, coal. The political cycle of what's going on in Colombia as well can be a catalyst, and a negative one or positive. Brazil, a very robust socialist program. They also have exports. And, they got different companies. Oh, Vale, right? Vale is definitely a name that's super. Why is it reminding me? This ADR, I'm pretty sure it's up 100% already this year. Like, geez, Louise. And actually, in the grand scheme of things, it's still relatively cheap. Right? Vale, the steel company, right? Engaging in exportation of iron ore pellets and iron alloys. It operates through these segments of that. And, founded in Rio de Janeiro. So these ADRs of these companies, like a Val, offer this whole thing, right? Where we just talk about iron ore and agricultural, right? These resilient banks, I think New is also a bank of theirs. New Holdings, the regional bank. It's a smaller bank. No. Maybe I'm wrong in this case. Maybe New isn't a... Yep. The fact that the website defaulted into Portuguese, I think it is. Yeah. I think it actually is a bank kind of, built out the Cayman Islands, but there it is right there at the bottom. Sao Paulo. I said that right. I don't know how to say that. I don't know how to pronounce that actually. So this bank as well, New, has done really well as a regional bank. So these are some components of it. So yes, these are micro to the point of view as like this particular company and this particular company as well are also doing well, right? But once you begin to understand the macro as to why these companies are doing well at a micro scale, it will begin to all make sense, right? And then you can apply these macro themes that you find yourself viewing and looking through, like copper, like the metals, like commodities with oil and iron and such, and find winners within that. Right? Start looking for, what company does this? What in that region? Or who's the best in that region? Or XYZ in that region per se, right? So all those things are part of this. And Peru also itself, copper, silver, zinc. Like, I'm sure we don't have to explain to you about what's all in all going on. But the mining production is definitely on the up and up, right? So all of these begin to become a scenario. And then again, the same scenario that we talked about with South Korea, these Latin American companies, they trade at a price to equity discount that's insane. It's insane. Because the major person, the everyday person is sitting in an index. The same index that owns the same 500 companies in the US or the top 100 tech companies. And because of that perpetual buying of 401ks and everybody, I'm going to stash it away. Just index invested, just index and move on. Okay, cool, right? That's pushing the assets higher, along with the tailwind of the fact that, hey, the currency that these assets are denominated in are also decreasing, right? So when we go and look at, let me see. So when we go and look at, one of these, I got you. 1 second. I'm going to send this out. Boom. Right? When we go and look at the macro data of what's going on, the dollar is decreasing. I want a lot of people to also kind of take this in point of view. A lot of times, if you just view it like such, I'm going to draw it out real quick. I'll be right back. I'm going to do it. Think of it as a fraction. Right? Think of it as a fraction. we got the numerator and the denominator of that fraction, right? And the viewpoint of a fraction could actually be applied in several ways, right? So when you think about shares, right? Shares of an asset, if it's a like the short float, that's a big important thing, right? And I do want to talk about that as well with USAR and what's happened with that Critical Minds deal as well. Hopefully I can get to that. But that's another piece. So when the asset, let's say the asset's in denominator, right? So when you go and buy one share of Apple, let's say this share of Apple is $100, right? And you buy it with $100. There's a natural drift that occurs when the options are different. When the options are a bit, when I say options, I mean alternatives for investments, right? When you buy something, you buy this one share of Apple in this particular case, I guess, right? And as the US dollar continues to get eroded away by inflation, right? You start to question and ask yourself, like, okay, well, this asset of Apple is extremely beneficial and is and the real reward of owning this Apple asset or whatever other, asset that's providing you interest, whether it's a bond or maybe even having a mortgage and renting out places and it's bringing you positive cash flow, right? As the dollar continues to decrease in value because the denominator increases, right? So let's say we have 100 in the numerator space and we have 1,000 in the denominator space, right? If in totality there was only $1,000 in circulation and you owned $100, you own effectively 10% of the circulation, right? Same thing would happen with float. If there's only 1,000 shares available of a company and you own 100 shares, you own 10% of the company, kind of, sort of. Basically, I only say kind of, sort of, because sometimes there's preferred shares, there's other shares that aren't necessarily, displaced or shown in the market, in the public markets. So yes, okay, cool. You own 10%. But now, as the Federal Reserve says, hey, we can print our way through things, right? I had one of my members just recently mention about, like, what are my thoughts on the Fed injecting $55 billion into the markets? Wow. What does that tell me? That tells me that the denominator just increased. So if we say, hey, that they're going to put all this cash into the market, they're putting all this cash into the market, that means that the denominator just increased. So maybe it's not 1,000 in the denominator anymore. It's now 10,000. So now my original 100 over 1,000 shares at 10% now is beginning to look like 100 shares at 10,000. I only have 1% now of the market. Why is that the case? Because the denominator increased. The denominator increased. So with that being said, you basically withered away the value that you had. And in some cases, as they print more and more money, the actual value of that said money doesn't increase. It actually does the exact opposite. It decreases, right? And we've seen that in several. I don't even have to show you guys this, right? You could buy a house in the 70s with like 10K, and it's a bomb house for a starter house, at least, right? You can't even get a 200 square foot apartment for that now. Like, you can't. It's not possible. Why is that not possible? Because the dollar has continued to be inflated away. Because we come up with that premise of, if we have an issue, if we have this issue, we can attack this issue by throwing a ton of money at it, right? And then throwing the ton of money at it solves the issue, and sometimes is what we need to do for the betterment of society, right? Like COVID, we needed to send those checks out. Those people were going to be hungry, right? But the side effects of that lead to higher levels of inflation, and the lack of this. So what is this graph here showing you tonight? That the dollar is no longer the world reserve currency. It seems as though gold is, with it peaking here now at roughly 50% of the IMF, International Monetary Fund, saying that, hey, the amount of gold in global reserves is now 50%. And the US dollar has fell now from the early teens of 20s, the 20 teens, at about 55%, 50 change percent, well into almost touching 40%. We're seeing a 15%, 10 to 15% collapse in the global reserve, choosing not to use the US dollar as its main reserve currency. It's not good for the US dollar, especially after we printed so much of it. But this other thing, such as gold, this really material thing that is hard to find, very capital intensive to excavate, this other thing that has been like probably the longest standing true form of money is now stepped its way into being the number one gold reserve currency. And in another place, it's the pound, right? In another place, it's the yen. And another place, it's euros, right? So none of those have really competed with 1 and 2 as the US and gold so far, per se, but who knows? World orders can change. They can shift dramatically. And Ray Dalio has been preaching and talking about it and going on his tour about it because it's really important stuff. And the same thing happens with denominators and numerators and fractions in this market. That's why when you hear about a company doing a buyback, it's positive news for that asset. Why? Because they're going to do the opposite. They're basically taking the shares floating, currently existing, available for you and I to go buy from the market, and reducing it and locking it away and vaulting it away. So they're doing the opposite in this case. They're saying, oh, we have 10,000 shares available in the float, right? We have 10,000 shares available in the float, but we're actually going to buy so much of it, we're going to buy back it, that it kind of locks it up. And it's not really a share that could be transacted as easily or even as much at all, if any. So now, guess what? The value of my current shares increase. There's an intrinsic increase of value of my share because now it's harder to get a share. It's even harder to accumulate 100 shares than it was prior, right? And then because of that as well, in some way, cases or forms, you as a retail investor found yourself having a pretty big piece of what is ownership. So that's one of the major pieces that I think is super important to go touch on real quick, and kind of get into, right? So hopefully you guys have an understanding of where I'm at so far with that piece. really. So now we can, I guess, kind of step back into the conversation of global, right? So this is where we continue to find more global and like macro ideas, right? So oil geopolitic thesis, Venezuela's reintegration and Colombia's energy leverage. I think this is one of the most under-recognized macro opportunities as of right now. I think copper was the most under-recognized one, but as of right now, it seems as if um, people are starting to, become hip or become more knowledgeable to it. So basically, Venezuela, largest oil reserves. We know this, right? This is not breaking news. They've been talking about this for forever. Locked out of global markets, right? That embargo, that oil export from their basically because of the leadership that they were under. Production collapsed, right? Because of it, got it dramatically from 3.2 million to 400K, like just because huge supply. And then recent political shifts are starting to open up the possibility, right? So the U.S. stepped in, took out the leader at that point. I'm not remembering his name right now, but at Caracas, he took out the leader, dictator there, and then basically went ahead and turn on the the selling press, right? Um, they came it came online. I think, what is it? A group called a Vital Group. I can find it real quick. I can try and find it real quick. Got you. A company called Vital Group in the Netherlands and Trafuga, a logistics company based out of Singapore, right? They went ahead and are actually the ones that were chartered by the U.S. government to do the moving. They're looking to move oil from Venezuela, from Caracas into Bullen Bay, Curacao, right? And if you know anything about history and the Netherlands and Curacao, there's definite deep connection there, and we do, as the U.S., have a deep connection with the Netherlands as well. Um, you know, whether how strong it will be in the longer run is another question, but it is what it is at the moment, right? Um, and they really were the first people to try and help, facilitate this whole move. The U.S. sends its first 500 million since the invasion earlier this January to the Venezuelan government for the oil, and then these other companies that are strategically placed there as of right now are going to be able to help with the actual logistics and the moving of the oil. But as you know, like the oil business is a very capital intensive business, very equipment heavy business. So for us to actually build out, supply chains and things that can actually work for the Venezuela's goal of, reintegrating with the global supply, is going to take some time for companies to step in and really do that. There are some companies there that do have an existing footprint, but I think for it to actually go through, it will take time to build these out. And as of right now, Chevron seems to be the energy player that can be the one that, as a US based company, can step in and help facilitate more and more of this, these different things. So now let's talk about we talked about Venezuela. Cool. Right now it seems like they're maybe, not a part of embargo and maybe the selling will kick in. So let's just talk about the proximity. Colombia is right next to Venezuela, right? So I think as of right now, it's right next to Venezuela. It makes it much more minimal, sorry, to sell. Um, there we go. That's the pipeline. Yeah. Minimal logistics, right? There's going to definitely be some things that going to be retrofitted. I believe my understanding is that on the Colombian side, the pipeline is struggling a bit with infrastructure, but on the Venezuelan side, it's not bad. Colombia, the company Ecopetrol in this particular case, which is where we're going to go from the macro, right? And we're going to zoom in onto the micro now, is South America's like one of leading integrated energy companies, coastal refineries that are very positioned. They're positioned to process this heavier crude that Venezuela is what they're known to create, which I think is like a Midol. Is it Midol or is it my something 16? Is like the name of the crude that they create, and that they like have that specialty in. Mary, no. What am I saying? Midol. That's a drug. It's like a drug for headache or something, right? Mary 16. Yep. Heavy, sour crude oil produced Venezuela. Yep. Exactly. I guess it has high levels of sulfur. Highly valued by complex refineries, specifically in China and US Gulf Coast for producing asphalt and for marine fuels. Okay, cool. This is all good to know. All good to know. So you can see where things are shipping, right? So, like, now me learning that they're for marine fuels, right? This supply shock that we're going to see of potentially hundreds of billions of oil available now, we're going to see a supply shock where we're going to start to see growing US demand for non-OPEC crude, right? Like, we don't need oil from the Middle East as much as we did 2 months ago, right? We're not that dependent on them, which again goes back to the zoom out macro, Trump's whole prerogative in his administration. We must make sure that we're independent, right? It's about national sovereignty. It's about the ability to not be so single point of failure focused. It's about the point of view that we do not want something similar to happen where COVID came and China was our single point of failure. We had no PPE protection. We had, you know what I mean? Like, and when you look at it from that point of view, it is a very simple, yeah, we shouldn't be dependent on just this one country to provide all these things for us. Albeit that it is, that this country specializes in these items, they make it very, very well, but it's actually in our best interest to not be very hyper focused. Like, what? Sure, we can have loyalty to countries and businesses and other bits and pieces that provide great deals of economic benefits to us, but to say we solely depend on them, imagine if you only had one grocery store to choose from. You'd be pissed off when you walk in your grocery store and they don't have your favorite snack. And you're going to be really mad about it. And what are you going to do? Just not have your snack? Sure, find a new one. Maybe you'll try a different flavor. Okay, fine. But is that what you really want to do? No, you want the thing that you want, right? So I'm not going to get into politics. I'm definitely trying not to, but macro definitely does push you into that realm because they're the ones making these decisions and pushing the needle on these pieces. But when you think about it, it is important for sovereignty to make sure that we don't have these single point of failures in our supply chain that lead us to potential points where we have no equipment. Albeit that yes, this was a global issue, COVID in particular, right? But it was a global issue that opened our eyes. And now we can take steps to try to go about mitigating something similar happening in the future. These black swan events are meant to teach us something, not just go through it and wallow in the sorrow of the pain of them. We're supposed to learn from them. The 2008 housing crisis, we learned from them. I hope so, at least. I hope the banks are taking less risks. Then we created whole other programs and agencies to oversee the risk of these banks so that we don't take those levers of that, right? Same thing in 1929 before the Great Depression. 1929, we saw these huge amounts of over speculation in the markets. People trading at 2-to-1, 3-to-1 leverage with cash that they don't have. And not only that, but the speed of things that happened, there was no visibility on that. Right now, I can open up my phone, open up my iPad, and see the price of my silver ETF shares and be able to be content with or understand with, right? When you have that lack of visibility on price back in 1929, and everybody's just trying to sell, right? The price gaps and it gaps. They didn't have circuit breakers like how we had in 2020 when we saw the S&P drop a certain percentage and the exchange said, okay, cool, we're stopping it. We're stopping the markets for a bit. Everybody needs to calm down. Right? And another circuit breaker, right? So those types of things were not set in place. There was no SEC to poke around and look through things and what's a security, what isn't a security. Are you allowed to sell these pink slip stocks that are like these random companies that don't even have proper financials put together, no due diligence being done, can be sold and bought by anybody, no accredited investor veil to protect individuals, right? These are all points of us learning our mistakes, of our flaws prior, and then where they're going into. So that is another point, a very, very big point on the Trump administration is they're going to posture it in the point of national security, sovereignty, XYZ, ABC. And in reality, they are correct from that point of view. They may be exhausting what they should be doing. Again, not trying to get into politics as to what is ethically right to be doing, right? To posture their way and maybe, show their feathers like a peacock, I guess, whatever. And this is what we want. This is how it has to go now type of energy. How they're going about it may not be the best way, but it is what they're doing. And it is what I do believe in some form or fashion should be done. Right? Yeah. So now, right, all that put together, now we find ourselves with Ecopetrol in a perfect point where, they got an integrated model. They got everything they need. They have their own reserves on top of pipelines, on top of coastal refineries and they're actually specialized in refining the exact oil that Venezuela makes, obviously because they're neighbors. They've probably been doing mad R&D on this for quite some time. And now they're looking at it with a possibility, right? And then you get to look and start to say, like, okay, it ends up being disinflationary because the access to Venezuelan crude will lower import costs for Colombian refining, margin expansion without price increases. Margin expansion. Now companies, right? These companies that we're looking at, EC, are on the verge of potentially really having a breakout year, a breakout 2 years, a breakout a breakout sector, breakout cycle, whatever. Because so many of these macro things are lining up for them to possibly make it happen. Will it happen or not? I'm not entirely sure yet, but it's showing that it could lead there. And as we continue to step there day by day, and the story gets more and more concrete, more and more conviction begins to build in this thesis and where you can place money to then be able to get asymmetric risk, where the risk of this scenario actually occurring ends up being so small, so minuscule, that a company like Ecopetrol could find its way into trading. Actually, hold on, wait 1 second. If we do a time block, a time connection, locked out of global markets 2017 with the embargo, oil restrictions, right? Okay, let's take a look at the charts. They flew when it got locked out. Interesting. 2017. That's super interesting. Okay. And then also we look at from a different point of view of what's happening in the charts. I mean, I know we're saying macro this week, but if we put our technician hat on a little bit as well, what happens when price gets to this point? What happens when price gets to $9? Because the last few times price went to $9, it went to 27. Last time price went to $9, it went to 19. Last time price went to $9, it went to 12. 38%, right? Like 111%, right? 187%. It's increasingly gotten lower and lower and lower, but this time we've already done 38% beyond. Is something shifting here? Is something fundamentally shifting here? And we're seeing it being displayed within its price? I think something has potentially. So yeah, I mean, like, there's more bullet points on this. Rising, Colombian consumption, rada. I could go on more and more days. I wrote up a bunch of stuff on this. So what's the scenario? 25% of Venezuelan reserves come in over the next 3 or 5, come online over the next 3 or 5 years. What is the impact? Maybe it becomes, incremental supply. It shows some downward pressure on gas, maybe $5 to $15 a barrel. Who benefits? The U.S. We import. I mean, we do also do frac, but the U.S., Europe, Asia, and emerging markets with oil intensity. I probably put this on bold or something, but emerging markets with oil intensity, meaning countries that are directly correlated to oil, right? These countries that most of their GDP comes from oil. That's another good point that we should keep a look at, right? Like try to get in. These are also like great research questions and points that you can look into. This is where GDP becomes important, right? So maybe Colombia gains 50% of Venezuela's operating rights. Don't really see that probably happening for real. But refining speeds improve. Ecopetrol margin expansion galore, right? And the Colombian gasoline market explodes. Or, if oil moves from its $80 to $100 range into 65, 75, again, disinflationary impulses will go across the global economy, but it would be much more impactful in the Latin American region, specifically because of how inflation sensitive they are, right? These countries are still developing, still doing the best they can with their economics. I believe, at least I pray that they are, hope that they are. Um, but yeah, so that's the other piece there. Colombia is economy sensitive to energy inflation. It currently imports 30% of the energy it needs. So it could be a scenario where Venezuelan crude does help improve that dramatically, and it also helps their global GDP. So why Colombia led the 2025 returns? I mean, it seems like the oil thing is kind of already building. Ecopetrol is just an example of that, right? And then you continue to connect more dots. You marry the data, connect the dots and marry the data, y'all. That's the main thing I will always come on here and potentially preach and talk through some pieces. When we look at the options flow, we see that I don't see that much Ecopetrol flow, but when I do see it, it's quite interesting, right? It is Ecopetrol, Colombian Petrol Company, February 11 calls when it's trading at 1088 with a decent amount of size behind it, and extremely unusual to it's 23 times outside of its usual volume range, right? Like something sounds interesting, like somebody knows something, right? And then we can even just take a look at the flow, whereas this is actually some bearish flow that we saw out of South Korea. Some people were trying to go short range, right? On this with some good duration here at the 100. So maybe we will see a pullback in Korea, in the Korean index, before it continues to push, right? But if you look at the dates here, this was the 14th, and then shortly thereafter on the 21st, Samsung shares went up 14%, right? All while the Korean stock market continued to push. 5,000 target, huge rally. Also, Germany did huge. Again, chip heavyweights, Samsung and SK Hynix, that we're talking about, right? And if we just look at a whole, the emerging markets as a whole, December, I said, yo, look, it's been coiling, ready to go, ready to spread its legs. And if we look at EEM now, or EEM back then, ending out last year about $55. Now, like, it's a completely different. I mean, not completely different, but it's a different animal. Look, like, it's made a great move here, breaking out and really pushing, like showing and strutting its legs for real. So let's look at that, right? So we see it here, right? And then we see it here. It's gone on to show some great move. We're talking about 7% in a month, less than a month, right? And it's on track to continue to do such. Like, when was the last time it had a great period of time? Oh, wait, let's go back to this. Emerging markets from 2000 to 2009. Okay, cool. Let's take a look. Oh, what happened? Oh, Wow, like it was doing really good. You know, you start to connect those dots and see what happened. What actually happened with the price? Um, and then I think the last piece that I think that I found is super interesting is that I'm not sure exactly when, but the Colombian president is about to have a meeting with President Trump. About to have a meeting with President Trump. And what do you think they're going to talk about? How's your golf game? No, they didn't talk about policy. Policy. And it's scheduled for when? February 3rd. So you know what it sounds like to me? The announcement remarks a significant de-escalation after months of hostile activity as the U.S. revoked his visa, the Colombian country's visa, the Colombian leader's visa, imposed sanctions on him and his family over unproven drug trafficking allegations. For whatever reason that they do those things, they do it, right? And then, um, and then now they're gonna have a hold a meeting with him. They're engaging in productive conversations. The United States remains deeply concerned about the instability, violence, and illicit drug cultivation and trafficking in Colombia. So it seems like to me, both parties want something from one another. Trump administration in the US wants Colombia to probably stop sending over cocaine, which, I mean, to some extent that they probably do or don't, I don't know. I don't know. Right? Um, or even like how the Colombian national government as a whole is even aiding in this. I don't know. Doesn't make sense. But the point is, as the leader of that country, right? It seems like Trump and the rest of the admin is trying to hold them accountable and say, "Hey, you're the president. What's up with going on with the drug trafficking and XYZ and ABC? What can we do about that?" Right? And then Colombian president on the other side may say, "Hey, look, I see that you're doing some pretty cool things over in Venezuela, and you're getting the oil back running, and you're doing this, that. Look, we can probably use that, and we don't mind maybe buying it off of you or whatever that is." And then that's how deals form. That's how these alliances form. Maybe alliances was too strong of a word in this case, but agreements, strategic agreements, maybe the better word. And then those macro shifts tend to, right? And this is, I guess a bit more predictive than it is analytical, but it's more so because it's not much quantitative data points that we can use in this um in this like potential piece. It's more so, just like what could happen, right? And understanding what could happen could place you in the mindset to be ready for when it does happen, right? And positioning yourself, already thinking through the idea so much so that if it does happen, well, guess what? I'm prepared for it, basically. So there's some more pieces in here. I guess I could go ahead and just copy and drop the rest of this down below. Like I really went through a lot on this, and we're already at an hour 24, but this framework is insane. Got a lot of things going on. Case study, Europe's defense infrastructure play, right? Only 8% of global attendees expect Europe to outperform in 2025. Doesn't seem like Europe is going to do too well, but there are going to be specific companies doing great things. I'm trying to not remember one more. I need to remember one more. I need to remember one more. Nedrick, one more. Come on. No, come on, come on, come on. Oh my gosh, I can't believe I'm so pissed right now. See, another one. So, right, cool. These companies are doing great. Saab, they create fighter jets, defense. Defense has been a big question. That whole realm is kind of under issues. And then also, that company. I can't put it in the thing now, but that company, super huge. Germany as well, right? But this is it where they're doing huge power generation. I think they're going to be a big play in Europe's angle to AI eventually, maybe kind of sort of. They seem to be very anti-tech over in Europe at times, so not really sure what they're going to how they're viewing a lot going on. And even India. Listen, man, India's gone through the roots. The Goldman's over here projecting a 6.5% GDP growth forecast for them. Their population's huge. They're on track to become the third largest economy by 2027, passing Japan, passing Germany. Um, Largest populations, young workforce, and they're English proficient, right? Um, and it's accelerating. Now, what they've got going over in China is interesting, and there is obviously going to be some strategic agreements there, simply because also like geographically placed like in such a good, posture. Um, they have a relatively inward focused economy. They're better positioned with tariffs as opposed to China. Um, China's economic growth has not translated to the stock market appreciation as much as India's has. I think there is a slight distaste for Chinese assets, even in the U.S. market as ADRs, because of the Chinese government and their decisions to basically, when they choose to turn off capitalism, they can, and when they choose to turn it back on, they do. And I don't think U.S. Capital allocators are fans of that. That understanding or misunderstanding of like when something is actually gonna move. So yeah, Japan's 1980s is a cautionary tale. The market rose every year, outperforming dramatically. And then at a peak, Japan accounted for 50% of global market cap. Insane. So huge. Uh, oh, yes, this is another big like story. Kind of reminds me of a tulip story in a way. Tokyo's Imperial Palace land, the land itself was valued higher than all of California. What? One palace, one building was bigger than all of California in terms of value back in the 80s. Yeah. So the framework. The framework is this. The framework is begin to understand market composition. What companies actually make up these indexes? Korea, semiconductors and tech and chips. Chile, copper. Brazil, commodities and banks. Europe, more on the industrial side, energy side, defense side, things like that. The index is the opportunity in this case, right? So if we were to go look at that, we'll take a look at that in a minute. But and then identify themes of macro policy, macroeconomic shifts, global themes, AI, green, defense spending, energy realignment, like we just spoke about with Venezuela, and how they affect them. Ask yourself, what's the purest play on this theme? Meaning, who is the number one benefactor to this? Hey, where are they currently relative to the opportunity? This is where we get back into asymmetric risk. When you see that visualization of asymmetric risk, and like what that means, this is really it right here, where it's not. Boy, it looks ugly now. I can't. Okay. I'm just trying to put a graph in, but it's not even letting me do that for real. Okay, that works. All right. Understand where, some of these markets are trading at a deep discount, and maybe this is where you can take advantage of that. And then watch for catalysts, watch for political cycles, watch for conversations and people talking about these different things, these events like Davos that they just had, the World Economic Forum in Switzerland, trade agreements, things like that. Consider macro spillovers, right? How does one region structure ripple through others? This is what when I talk about nth order effects, right? Where one thing dominoes another thing, where dominoes another thing, dominoes another thing, specifically because these macro things are not just the micro. One particular company is now strategically aligning with this to do this, to save itself this bottom line, and then be able to get back 4% on earnings. Like, it's not that micro. So these macro things can lead to more opportunities because there's going to be so many pieces, so many things affected by these shifts. That's why it's important to look at the macro shifts as well, because they can lead you to 20 trades compared to the one trade that you have in micro, right? And these 20 trades could be one of the most tidal wave levels of trades, like what we've seen in silver. I've never performed the way that I have with based on the as of recent, just by knowing what's happening with silver, knowing what's happening with global reserves and gold, knowing what's happening in these macro point of views gives me the deep conviction to sit through drawdowns and hold these things for longer than I probably ever would in any other scenario. Looking at these trends, like, what? This is full vert, like vertical, bro. Like, what? Holy shit! It's at futures are open. Yeah, it's at 108 an ounce. Silver's at $108 an ounce. Gold's at $5,000 and $82 an ounce. Holy crap! Wow. Wow, that's so fucked. Wow. Jeez. Okay. Anyways, so that's what these are doing, right? So we're seeing Venezuelan oil supply. Maybe that could lead to margin expansion. Maybe that could lead to Latin American disinflation. Maybe that could lead to a rate cutting cycle by their central bank. And then what happens? The emerging markets get re-rated as a whole, right? And then it ends up being a mechanism of wind at your back on the assets. The assets you're holding now may have generally just performed 10%, but now all these other things are affecting these other things, are affecting these policies that are going into effect, and then it ends up affecting the original thing in the first place, and then it pushes you even further. So now a 12% move looks like a 15, because these other things came in and added onto it and made it a really putting gas on the fire. So yeah, evidence is clear. Bottom line, the US stock market is the greatest, will be, but globalism creates opportunities everywhere. It will be limiting and historically costly not to evaluate every landscape. Every landscape, right? So, if you just had owned the US assets over that decade, you didn't return. While emerging markets were insane. So and okay, and then let's cap off this macro talk, I guess, with an example. Let's dive into it. Let's dive into it. An example. The Trump administration has been going on and on and on about um, again, sovereignty, it's a national security, it's this that, and the other, it's whatever it is, fine. And we need Greenland territory. We need Greenland. Why do we need Greenland? I don't get it. Why do we need Greenland? We already have agreements from, post World War era that basically say, we're allowed to have bases there we're allowed to do this XYZ. And then you realize this in the in the um, in the pursuit of trying to make US less dependent on China, right? In the pursuit of doing such, we have to find alternatives of China's right? Last year, they invested heavily into MP. MP, a US based company that was basically a very US based company that does with the mining or that I'm blanking. Jeez, I can't speak. All right. MP is developing a fully domestic rare earth mine to magnet supply chain for the United States with plans to begin commercial production of the permanent magnets used in electric vehicles, used in turbines, maybe even long-term attractive humanoid market, what we got going on with the robots over there, maybe by the end of next year, this year, I don't know. Geopolitical tensions have been in the way because the US are getting all its rare earths from, guess who? China. So now we've bottlenecked this whole scenario where, with our growth and our ability to produce these assets, produce these products, because we can only buy them from one place. And if we're in annoyance with this one place, we're stuck like Chuck. So now you start to see that's why they wanted Greenland. That's why they wanted Venezuela. So they can unlock these mechanisms of you know exploitation really, and like taking um these earths and minerals and what? Okay, that's what they're doing this for? Trying to repurpose or reset the table. It's almost like they're trying to reset the table of who world order, and like almost like take back by taking others. Take back charge by taking others. And that's what it is. So these include critical raw materials, resources such as lithium, rare earth elements that are essential for green technologies, right? Batteries, all the things we just spoke of. They're highly sensitive, and plus other vulnerable minerals and metals that could be used for oil and gas, right? And other huge things. I mean, and then you see all that, and you come back to You come back to it and you see, hey, the U.S. buys a stake in MP. What does MP do? It does exactly what we just talked about with rare earths and such. And the stock jumps from, I think, like 40 some bucks into like 90. Okay, that's opportunity. What? And then we see that the Trump administration is looking to do a similar ownership stake with USAR. Right now, Trump administration is planning to inject 1.6 billion into American rare earths company, right? USA Rare Earth, its biggest investment in the sector. So it's bigger than the MP deal. And Washington's latest foray into the private industry to shore up supplies for key minerals. The US government will receive a 10% stake of USAR Earth, a publicly traded Oklahoma based miner that controls significant US deposits of heavy rare earths, according to people familiar with the matter. And what does that mean? If you ask me, sounds like USAR is going to jump to me. What do we see us do? Right? What did we see MP just do? And I can't quite check it right now in terms of the price, but maybe I can. I don't know. Let me see. But that's news as of Friday. But I think as of right now, it's up 20% overnight. So 20%. And if we look at that, you can see this is my little basket of earth companies. Sorry, that I was interested in and like focusing on. I was like, I really like MP. I really liked Core Mill, but CRML, so Critical Metals Corp, not really Core Mill, but that's just how I call the ticker. And then USAR, because they seem to be the one mostly connected with Trump and his crew right now, of like what they're doing. So USAR closed on Friday at 24.77, up 9%. And I'm about to get a price check on it right now, but it may be somewhere closer into 30 bucks right now. 30 bucks. 20% plus? Sheesh. Right? Bet. Right? And that's from following and understanding global policy and understanding what countries, what they provide, who they actually provide for, right? Like where they are, and then connecting the dots, and then just trying to marry the data. Marry the data. if it comes down your pike, I hope you understand. If you have any questions, feel free to ask away. I'll be back here next week, you know, talking about stuff, going through the markets, maybe talking a little history. Um, but yeah, that's pretty much it. I'd also like to go through what I'm reading this week, or what I'm reading in general. I'm currently reading 2 books right now. I'm reading Talk Like Ted, trying to get better on my speech, trying to get better on, um, understanding my audience, and really just trying to connect with people, and also um, maybe get a bit out my head with certain things. I connect a lot of dots in my head, and it is difficult at times for me to actually display or express that to other individuals, because there's certain assumptions that I have in my head that I still have in my head, that I kind of take at times as a given from other people, and it may not be the case. So I'm trying to get better at speaking more holistically so any and all can understand. Um, and then I am also reading The Man Who Solved the Markets, How Jim Simmons Launched a Quant Revolution. This one is written on behalf of one of my favorite investors of all time, Jim Simmons. So it's going to be a book that I probably find myself reading multiple times. I wouldn't be surprised if I read it, finished it, and then got right back to reading it again, just to try and see, what things I can, what things I may be able to find and learn a bit more on, So always learning more, trying to understand history, how markets connect. It's truly the great puzzle. The great puzzle of life is one of my favorite puzzles of all time. It's the best game that there ever is. Like, nobody can tell me otherwise. But I hope you enjoyed the stream. And I hope we'll talk soon. Agent out. Till next time, y'all. Peace.